morning, I'm David Carswell and this is Saxo Bank Market Call. Today is the 3rd of January. Yesterday we saw the release of US ISM manufacturing, which was out at 47.7 versus 50.5 expected, and ISM prices paid was higher than expected at 68. The expectation was 65. So not a really good combination. At the same time, the US ABC consumer confidence was out at minus 20. The prior reading was minus 23, and this is at a rather low number. The US dollar was continuing to weaken after these figures, and euro dollar is now at a 3-week high, trading at 147.20 or 25. Sterling is also weakening. Euro sterling is visiting new highs at around 0.7447. Fixed income is not really doing that much, as economic growth seems to weaken at the same time as inflation is going higher, so that sort of cocktail is not really, that's a mixed signal for fixed income. Stocks were broadly lower. Dow Jones down around 1.67%, and Asian stocks also going lower. Hang Seng is down 1.5% this morning. And for crude oil and gold, making new highs on dollar weakness and inflation worries. We saw the crude oil February contract trading at $100 per barrel for the first time. Front month contract is trading that high, and spot gold is trading above $860 per ounce in the as I said, spot gold and not in any futures contracts. So what's going on? Well, we saw these disappointing ISM manufacturing figures and also the FOMC minutes highlighting growth concerns stemming from credit woes, and the probability of a fourth consecutive U.S. rate cut to 4% is now calculating from the futures market, store futures market, at 76%, while the corresponding 24% probability of a 50 basis points rate cut at the upcoming FOMC meeting. Still, the really big thing I believe here is the continued dollar weakness, and also the fact that gold is going higher with crude oil as well, silver, most commodities in general going higher, pricing in more dollar weakness, and also continued strong growth in emerging markets that will push most commodity prices higher. The calendar today at 8:55 GMT, we have the German unemployment figures. The unemployment rate is expected at 8.5%, and 13:15 GMT, the US ADP employment change expected at 33,000. We believe that we might see a higher figure than that because that is rather modest. But despite the fact that we might see a higher or a positive surprise, it will probably not be able to save the US dollar. We believe it will continue lower for today. Initial jobless claims and continuing claims have begun to creep higher in the past weeks, and we believe this will continue also today released at 13:30 GMT. We might see some rather high figures here. Factory orders in the US at 15 o'clock GMT expected at 0.5%. And then for energy traders, DOE US crude oil inventories at 15:30 GMT expected at minus 2.1 billion barrels. In the next couple of days, we have on the 4th of January, change in non-farm payrolls and unemployment rate in the US, very important, as well as the ISM non-manufacturing, also very important for the US, for stocks, for most markets actually, and also for Canada industrial product price and IV PMI, what is the equivalent of the ISM non-manufacturing in the US. Retail sales that is on Monday in Germany, and also the Eurozone unemployment rate on Monday could also move markets a bit. One FX trade out today we have in dollar Swiss. We think the downside in dollar Swiss looks more convincing than the upside in euro dollar, although we do still fancy the upside in euro dollar. But dollar Swiss getting close to a breakout here. We have a support at 111.53, so we would sell at 111.53 offered, and targeting 110.60 with a 25 pip stop. The technical picture is quite interesting here, with the Fibonacci levels fitting quite well with previous lows, and we believe that we should see a lot of stops being taken out below 111.53. Then on equities, we believe we'll see a downside continue in equities today, and especially for car producers like Volkswagen. Bleak outlook as the general economy is looking to weaken here, and also consumer demand for especially cars should also weaken on that note. We would sell Volkswagen an entry range around 90 to 95, and keeping a stop at 104 and targeting 80. So that's a slightly more longer-term trade here. It looks like we've seen some consolidation in the stock so far, and if that breaks either to the upside or downside, we could see some rather big movements. We definitely fancy the downside most. That is it for today, and thank you for joining me here on Saxo Bank Market Call.